Welcome back to the ETF Inspector. Uh, this is the weekend edition video. Video will be coming out on Sunday, June 15th. I'm making it Saturday night. This is the week look ahead and distribution guesstimate for ULTY and LFGY. Those are both YieldMax's weekly paying funds. One is the Ultra Option Income Strategy Fund, which trades options on up to 30 underlying stocks, and the other is LFGY, the crypto industry and tech portfolio option income ETF. As always, just a reminder, I'm on X. I let you know when videos are coming out, and also post about repost things from YieldMax. And channel's doing well. Update, we're up to 781 subscribers on a goal of 1,000. And if you missed the recap of how the funds finished the week, we've got the Friday videos came out, as well as if you have any interest in my personal trades, I make a video on that every Saturday, just going through everything I did for the week. But all right, so in this video, we're going to start off talking about ULTY. All right, we don't need to talk about trades because we've already talked about all of them on the days that they were done. So we will just we will talk about them without going through them as we come up with our guesstimate. So we'll start on the holdings page first. Went through and pulled the 30-day IV, updated as of today for each of the different stocks within the fund. The reason we do that is because the fund looks to pay out a yield, I'll say equivalent for lack of a better word, to the 30-day IV, the average of it. So I take, and I don't just average, I don't know if we're at 30 or 29, whatever it is. I don't just average them because that wouldn't be, the best math we could do, because if you have 100 on a stock that's 2%, and then you have 50 on a stock that's, 10%, then it's not 75 just because you're taking 100 plus 50 divided by 2. So I have a weighting, which is the value of the shares of that stock divided by the value of the shares of all stocks. So that gives us a weighting. And we can see we roughly range from the high 1% up to around 5 to 6% in the different funds. So some of the lesser known names, like a eToro, they're on the lower end. Some of the bigger ones, Hims and Hers, Robinhood, MicroStrategy, Nvidia. Well, MicroStrategy is kind of low, 3.93, but and also it's got to do with maybe they didn't start at that one, but the stock had a nice run up, and so its value has increased, which would bring up its weighting. So let's just look through. I think Tesla around 5.5. That might be the heaviest weighting, but there's a couple in the 5. So either way, we're pretty well distributed. So we what we take is we multiply the IV by the weight of each and every one, and then we add them all together to get the total. Our total average weighted 30-day IV went up slightly, 73.67, so that's good. That helps us with our distribution. We've got a couple over 100. Applied Digital is one of them. Circle's a new one we just got into, and they exploded, so they're 131%. 110 on Oklo. They had a big week. Rigetti, a 94%. And then we kind of, for the most part, run from like the 50s to the 90s for the rest of them. A few of them have settled down. Nvidia's a 37. But yeah, so I'm not going to sit and read line by line, but you get it, and you can pause the video if you want to really see it. But the reason you need them is so you can come up with your IV for the fund. All right, so Applied Digital going into the week. Now we'll just go through each one. Everything over here is going to be zeroed out because today the market's not open and not changing. So when we downloaded the holdings this morning for as of close yesterday, everything is what it is. So this is how we're going into the week. So we will see what kind of ranges we're looking for these stocks to trade for us to make the maximum profit. So Applied Digital has calls sold at $12.50. They have 8,970 of them. Now, pretty much, I haven't seen it yet where they don't, but they sell the maximum amount of contracts they can. So if you see 897,000 shares, comes out to 8,970 contracts because each contract is for 100 shares. So selling the max, same thing, 380, selling the max. There's a couple that they don't actually either own the shares or don't actually trade options at all. But if they own the shares and trade options on them, they trade 100%. So they closed at 11.18. That makes these calls at 12.50 11.8% out of the money. So best case scenario for us would be for it to rise, but not to cross 12.50, which would allow us to take in, bring up the value, which will bring up the value of the fund, bring up your price, and at the same time staying under 12.50, so we get to keep the maximum amount of the money that we collected from selling the call. They also bought puts at $9.50 and $10. Those are what you would consider like an insurance policy. They are trying to make money off the top end with selling calls, and then they are protecting the shares in case they drop by buying puts. It's considered a collar strategy. Okay. AppLovin, APP is the stock ticker. They're 2.88% out of the money for the $375 calls with the stock at $364.49. So I won't have to go into that detail every time like we just did. So basically, we want the stock to rise from its closing price. I guess we can just look over here, but not to go beyond the strike price on the sold calls. That will give us the best increase in value and keeping the premium that we collected. Now, if it runs too fast, they'll get scared probably and close them out. So we want a gradual increase, but then at the same time, gradual and slow and steady results in your 30-day IV dropping, which then results in collecting less premium when selling the options. So we kind of want the best of both worlds. We want the stock to be crazy and stay in control, which obviously you can't have it both ways. AST Space Mobile at 38.37. They have calls at 43. Those are 12% out of the money. Coinbase at 242.71. Calls at 250 are 3% out of the money. This one's trouble. Circle Internet Group at 133.56. They have calls at 120. So we are starting the week 10% in the money. In the money being bad when you have sold something and you have to buy it back. So as you can see, as of close on Friday, these were going to cost $2.1 million to close out. So we're going to need time to tick away and this stock to not continue to rise just to help us a little. What we really need is for it to drop down below 120. And if you watch my trading video, I also sold calls off the top of this, so I'd like them to drop as well. eToro closed at 61.56 with $65 calls. They're 5.5, almost 5.6% out of the money. First Solar at 175.20 has calls at 187.50. They're 7% out of the money. Hims and Hers, $55.48 closing price. They've got their options split up at 60 and 61, about twice as many at 61. They're 8.1 and 9.9% out of the money. Robinhood also has their split. They closed at 72.60. They have 76s and 77s that are 4.6 and 6% out of the money. IonQ kind of dipped down at the end of the day to 37.84. They've got $40.50 and $42 calls sold. They're 7 and about 11% out of the money. You can see 3 to 4 times as many of them are at the closer strike price there, similar to Robinhood. LabU, that's the triple leveraged biotech bull. 58.76 was the closing price. They've got $63 calls. They're 7.2% out of the money. Mara Holdings, 15.04 closing price. They have a $16 strike. They're 6.3% out of the money. 6.3 sounds good, but 94 cents doesn't always sound so good. Or 96 cents, I'm sorry. MicroStrategy, here's another one starting the week in the money. We don't usually do that. We usually start well out of the money. 382.87 with a 380 strike price there, 0.75% in the money. MicroStrategy, I just said that. NVIDIA closed at 141.97 with 144 calls. They are 1.4% out of the money. Oklo's at 63.66 cents, $63.66. $68 call. They're 6.8% out of the money. Palantir closed at $137.40. They've got $138 and $142 calls sold, 0.4 and 3.3% out of the money. So a lot of these are pretty close. If you're not familiar with the color coding system, red's in the money, that's bad. Yellow is less than 5% out of the money, so it's in our favor but close. And then green is greater than 5% out of the money. Reddit, $118.18 with a 119 and a 125 strike price, 0.6 and 5.7% out of the money. Rigetti closed at 11.40. They've got 12.50 calls. That's 9.6% out of the money. RH at 189.12 with 205 as the strike price on the calls. They're 8.4% out of the money. Supermicrocomputer, SMCI, closed at 41.56 with $43 call strike price. That's 3.4% out of the money. Tempus AI closed at 71.28. They have $76 call strike price. That's 6.6% out of the money. TNA, another triple leverage fund, small cap bulls, $30.53 with a 32.50 strike price. That's 6.4% out of the money. TQQQ, the other triple leverage, 72.83%, or 72.83, geez, $72.83, I'm sorry, with a $76 strike price. That's 4.3% out of the money. Tesla closed at 325.31. They have calls 250 contracts at 337.50 and 540 contracts at 350, 3.7 and 7.5% out of the money. Upstart Holdings closed at 52.02. They have 55 and 57.50 calls, 5.7 and 10.5% out of the money. Vertiv Holdings closed at a weird number for some reason. They went out to four decimal points, even being $100 stock, but closed at 110, we'll say 93, with 115 calls. They're 3.6% out of the money. And Vistra Corp at 173.75 with 177.50 calls are 2.1% out of the money. The value of the fund altogether, so this is finally current. Throughout the week, it's always delayed a day. We're at $490 million now. So it has just steadily grown. It has more than doubled since I've started covering it a month and a half ago. And the outstanding shares just continues to grow too. So we have over 80 million outstanding shares now. So you take your net assets divided by the shares, you get your NAV. Funny thing is, it's worth $6.10, and it closed at $6.10. So this one stays pretty much right there. All right, we'll take a look at coming up with a guesstimate. So if you weren't with us throughout the whole week, starting at line 1168 was Monday, and traveling all the way through Friday, we go from 1168 to 1561, nearly 400 lines of trades in 1 week. And how do we do? So on Monday, we lost $2.3 million trading. On Tuesday, we made $364,000. Wednesday, lost $3.2 million. Thursday, made $1.8 million. Friday, made $3.6 million. Totaled up, they profited $337,000, 656 cents. So if we took that money and divided it out between the 80 million shares, everybody would get 0.4 of 1 cent per share. Obviously, we don't think that that's going to be what they pay out. So when they don't make the amount they need to pay out, next we look at the IV, because they try to pay out an annual yield that goes along with the 30-day IV of the stocks within the fund. So with that, we would take the fund price, $6.10, that's what it closed on Friday, multiplied by the fund 30-day IV, which I showed you earlier, 73.67%, and then divide that by 52 because it's a 52 weeks in a year. It's a weekly payer. That comes out to 8.64 cents. So then, realistically, that's what they should be giving us. But I've come up with that type of number before, and they've paid us 9.5 cents. They seem like they really like paying us 9.5 cents. So I think they're going to pay us 9.5 cents. So would I be surprised if it was 8.5 cents? Not at all. That's what they should pay us. But I think we lost money last week. Had an estimate around 8.5 cents, and they paid 9.5. So until they prove me wrong, I'm going to give them a guesstimate of 9.5 cents. One thing in our favor, just the share values increases and decreases throughout the week, ended up $4 million. So we've got that going for us. All right, so there's your guess. They should pay us about 8.6 cents, but I think they're going to pay us 9.5 cents. Next, we'll move over to LFGY. We'll get through it a little quicker because we don't have to go through the beginning explanations of how things work. So LFGY does not trade the same way that ULTY does. ULTY does a collar strategy where they buy the shares, they sell calls, and they buy puts. LFGY, they do buy the shares, but for the most part, they just sell calls. I think there's one set of puts in this entire thing, but sometimes they don't even buy a call. So when you sell a call, if you sell a call and nothing else, and the stock runs past it, for every dollar that it runs past it is another dollar you lose per share, 100 shares per contract. So a lot of times they'll do a call spread where you sell a call and then you buy another one further out, and then that limits how much you can lose, because once you hit that point, then the next one's making just as much as the last one's losing, so they even out. So it seems like there's more insurance going into this week than normal. So maybe they've gotten burned one too many times and they're just trying to be a little cautious, or maybe they're just kind of changing things up. But so we'll scroll through real quick, take a look. BitDeer, it's got a 94% IV. That's a pretty high one. Galaxy's a 90. That's pretty high. We like those. Every high one helps increase when our IV is being used for the estimate. And obviously, if it's got a high IV, it's going to pay high premiums when they're selling the calls. Hut's 86. I don't know why they trade this one. Mercado Libre, it's 32%, very high dollar. It doesn't, I don't know. Lots more 30s and 40s over here than ULTY. ULTY's really going after the high IVs. Riot's 77. So really nothing over 100. We got a couple in the 90s. So the last one was 73%. LFGY's is 59%. That's what that comes to. Now, these guys are definitely not as evenly spread as ULTY, right? You can see a 12%. 12% of the money is in Coinbase. As we go through, almost 10% is in IBIT, nearly 8 in Mara, over 11 in MicroStrategy. Okay, so definitely not that even. Roughly everything's within 2% of each other. There's pretty big swings. Ones all the way through 12s. All right, BitDeer closed at 1268. Going into the week, we have $14 calls. They are 10.4% out of the money. So again, just a recap, right? We would like the price to rise from 1268, but not get to 14. That way we increase in value the most while getting to close out our calls at the end of the week for pennies. Clean Spark closed at $9.30. They have $10 calls. That 70 cents is 7.5% out of the money. Coinbase, 242.71 was the closing price. 255 is the strike price. Those are 5% out of the money. Core Scientific closed at 11.89. They have two sets of calls, but the vast majority, 5,700 compared to 172, are at 12.50, the 5% out of the money. The rest are at 9% out of the money. We're not worried about the government obligations fund. These are basically, it's practically like having your money in cash there. Galaxy Digital closed at 18.84. They've got a little bit sold at 21, 47 contracts, with the majority, 1,000 contracts at 25. They are 11 and 32% out of the money. I can't understand for the life of me why they would roll this into a whole nother week. I mean, why not close these out for 2 cents rather than, are we going to wait an entire week to make those other 2.5 cents to make $2,500 when you got $2 million that you're working off of? But we'll see. I think those will get closed real early in the week. GameStop, $22.14 was the closing price. They had a rough last couple days. Calls at $25.50, 15% out of the money. They took a huge drop, though, to get to 22, so they could very likely easily bounce back to that 25. And you know, with GameStop, 15% is not safe. Robinhood, $72.60 was the closing price. 78's the strike price. That's 7.4% out of the money. Hut 8 Corp, $17.48. They've got calls at 19 and 20, but we're really worried about the 19 because it's 30 times as many contracts. They're 8.7% out of the money, with the others at 14.4. No options on iBit. They just buy and sell the shares themselves. Mara Holdings closed at $15.04. They have $16 and $17 calls. Again, the 16 is way more important to us, right? 137,000 compared to 1,000. We don't care about that one. 6.38% out of the money and 13. MBTX, they don't own the shares. They only the options, so they have a credit call spread going with 260 being the sold call. They are 4.45% out of the money. But then they also have a longer term, right? December 31st is the expiration date. Debit put spread. So what that means is they actually paid to open this. Between 4 and 5 million is what they paid back when they opened it. So they are betting that this stock will drop, right? Because they bought the 230s and they sold the 150s. So the only way that this turns into a winner is the stock dropping, right? The stock dropping down below 230, which would increase the value of these $230 puts. So that, but not dropping obviously all the way to the 150. So this is an interesting one. We'll be talking about this one for a long time, till December. Hopefully they close it out before that. But if you're a trader yourself, just so you know, the professionals are short term betting it won't go over 260, and long term betting that it will drop below 230. So do with that what you want. I don't give financial advice. I just provide you with data. Mercado Libre closed at 2371.98. They have 2440 calls sold. They're 2.87% out of the money. MicroStrategy closed at 382.87. They have 390 and 392.50 calls, roughly same amount of contracts, 1.8 and 2.5% out of the money. NU Holdings closed at 11.90. They have 13 and $12 calls. Now the reason they're ordered upside down is because their $12 calls are sold out till June 27th, where the 13s are just next Friday, June 20th. Big difference in contracts. 180 this coming Friday, 3,900 the next Friday after that. So the ones for this week look good. They're 9% out of the money, but we need NU to basically not go up 10 cents over the next 2 weeks. They're only 0.84% out of the money. NVIDIA closed at $141.97. They have $146 calls, 2.84% out of the money. Opera closed at $18.43. They've got calls sold at $20 for this week and for July 18th. Obviously, not that many for the July 18th, 25, but 2,900 plus for this coming Friday. They are 8.5% out of the money. PayPal closed at $70.83 with a $73 call strike price. They're 3% out of the money. Riot Platforms at $9.72. They have $10.50 and $11 calls. As you can see, those 6,000 contracts compared to 181. So the 1050 is what we want it to stay under. 8% out of the money. The 11s are 13% out of the money. Tesla's at 325.31. 332.50 is the call strike price. They're 2.2% out of the money. And finally, Block, or XYZ, $61.57. They have $66 calls. They're 7.2% out of the money. So we're looking pretty good. Unlike ULTY, we don't have anything red, nothing in the money, so that's good for sure. Don't really like these low single digit out of the money going, needing it for the whole week, but we'll see. The fund is worth $133,330,000. There's 3.45 million outstanding shares. So that brings your NAV to 38.65. So that is what LFG is worth per share, and it closed at 38.57. So if you were buying at the end of the day, you were actually buying it for less than what it's worth. Congratulations, you got a little bargain. All right, we'll take a look at the distributions, or the guesstimate. So we've got our whole week worth of trades. Starts at line 563. Ends at 853. So what's that? 290 lines of trades throughout the week. And how'd they do? They made 37,000 on Monday, 33,000 on Tuesday, lost 4.1 million on Wednesday, made 311,000 on Thursday, and made 827,000 on Friday, bringing them to a total loss of $2,945,000 in trading for the week. So our income estimate, being negative, is worthless. They're not going to charge us 85 cents a share. They also lost $3.9 million in value. So this was an overall rough week, right? Generally, if your shares drop in value, you should have won your options trades, but they kind of got beat both ways. So if we do it by the IV, we take what the fund closed out on Friday. And the reason I take all this stuff about Friday is because they have to turn all this stuff in on Monday. So the only way you turn it on Monday, the most recent data you can use is from Friday. So even though they don't distribute or announce it, declare it till Wednesday, Monday and Tuesday don't matter. They've let us know that in interviews. So we take our IV multiplied by our price, divided by 52, because again, this is a weekly payer, and it comes out to 43.87 cents per share. Now I had 45 on there because they keep paying 45-ish. But I think I'm gonna lower it because not only did they lose almost 3 million, but then the value went down as well. So there's nothing extra to give them a reason to bring it up. So I'm thinking I'll go 44. Not that that's a huge change, but my guess is 44. 44 cents. All right. If you're curious how I come up with some of this stuff, I like Market Chameleon. There's other pages, obviously, but as you can see, I've been typing in all my different stocks to go in and get their most recent 30-day IV. So they were varied this week. Some were up, some were down. But so that's it. That's all I have for you. That's the video. So got a dad joke for you, but before I do, as always, thank you. If you watched it this long, I appreciate it. If you like it, great. Please hit the like button. If you're not already a subscriber, please consider it. Doesn't cost you anything, and it helps me out a lot. So, dad joke. I hope I didn't tell this already. Now I look up dad jokes all the time to be ready for the video. I tell my family, and then I can't remember if I told it in a video. So if this is a repeat, I apologize. Do you know why the corners in a hockey rink are rounded? You know, they don't do that in basketball. They don't do it in soccer. So the hockey rink corners are rounded. Well, because if they were 90 degrees, the ice would melt. Okay. Hope you had a nice weekend, and good luck trading this week. See you in the next video.